Hello, and welcome to our webinar. This is the latest in our series on SAP Finance Transformation and Compliance from Bramasol, the leaders in SAP Finance. Today, we will be focused on and talking about disclosure reporting and acceleration of disclosure reporting. Our title today is Updates and How to Accelerate Your Disclosure Reporting Process for Revenue Recognition and Lease Accounting. Joining me today are Julio Dalla Costa, CPA and Director of Technical Accounting, Carrie Peterson, Senior Solutions Engineer, and we also have on Vivek Thomas, who is our developer and program lead on the delivery of our disclosure reports. Next slide. Some quick housekeeping items as always. This webinar is being recorded. You should very shortly be able to access it from the Bramasol homepage or other areas we'll talk about in a moment. You can ask questions throughout this session down here on the panel. And feel free to go ahead and download previous webinars from our homepage. With regard to asking questions, real quick, want to remind everybody, feel free to ask questions around, can I do something? But we will try to address those up front. Ones that are more specific on how do I do something, we'll probably need to follow up, but we'll see how those go throughout. But do ask questions. Again, you can download the previous webinars. We have a whole series of these on disclosure reporting, revenue recognition, treasury, leasing, data migration. So hop on over there. I think we've done over 55 different webinars so far, and we have dozens of ebooks and other content that you can download here from the website. Next. Please feel free to contact us. We'd love to hear from you from a lot of different contexts. Reach out to us at bramasol.com. You can request a demo. You can contact us. We'd love to hear from you. Check us out at Facebook and join the conversations there. And then join our different LinkedIn groups, including RevRec Ready and Leasing Ready groups that you can exchange information and ask questions from our experts. Next. Just a real quick reminder for everybody, we have some new people on the line, so let me remind you, who is Bramasol? Bramasol is the leaders in SAP Finance and Compliance and Finance Transformation. We do this through our three pillars of our business: leasing, treasury, and RevRec. We build this with a deep foundation of analytics, dashboards, and disclosures. And we use the SAP Finance Innovation Platform, SAP S/4HANA, to drive everything. But don't just think about it as leasing, treasury, and RevRec. It's really all about the key processes that bring value to your business: procure to pay, order to cash, cash and risk management, and record to report. So again, with deep experience in all three of these areas, Bramasol is your answer for SAP Finance Solutions. Next. So today we're going to talk a little bit, and I'll introduce my colleague, Julio Dalla Costa. We're going to talk a lot about the different disclosure areas, and Julio and I just came from, along with Carrie, a great event hosted by the Association for Finance Professionals. And disclosures and reporting was a topic that came up fairly frequently in our conversations with treasurers throughout many Fortune 500 and smaller companies. So we thought it was a great idea to address these issues and share with you some of the tools, accelerators, and thought processes that have gone into the development of these from our customers. So Julio, I'm going to turn it over to you.
Thank you, John, and good day, everybody. This is Julio Dalla Costa once again. Carrie, if you want to go to the next slide, so we can continue our great discussion. So we have some updates, and we thought it'd be helpful to give the audience what's going on in the world of accounting as it relates to revenue recognition and lease accounting. So surprising to me, which the PCC came out with a study recently where they are saying that only 1% of private companies have completed ASC 606. and essentially will be unlikely to adopt the new lease accounting standards on time. That was a little surprising to me because it's in effect as of today, and we see a lot of companies struggle, and hence the reason for this webinar is because we really believe that what we're about to show you is going to help companies just like yourself accelerate your disclosure process. And what we see here is controllers and CFOs, as we all know, are juggling multiple demands. Well, the good news for some private companies is that this month, the FASB actually approved a delay in a number of significant standards: lease accounting, credit losses, hedging, and long duration insurance contracts. What does this mean? Well, companies were racing towards the deadline of December 31st, January 1. They had to be compliant with ASC 842 and a number of these other standards. The FASB, actually the AICPA, went to the FASB and says, many of our constituents are having a lot of issues adopting the standard in a timely basis. And the FASB listened. There were a number of meetings. And just a couple of weeks ago, they actually said that they will delay it, which means that companies have an extra year to actually implement the lease accounting standard, which is good news. But John, I wanted to bring you in because that survey is very interesting. I guess your point of view on that?
Well, I think it's a very interesting one because I think that customers are afraid to adopt the standards because they don't understand what they are, and they're looking for partners and people to help them do it, Julio. Certainly from the private companies, I think all of them have what I'll call RevRec exhaustion from having done a whole bunch of other projects. So I certainly expect, that is the case. But I think, if everybody out there thinks of this less as a compliance issue and more as a foundational opportunity for you to look at the way you do leasing, the way you do your revenue accounting, and allow you to create a foundation from which you can really optimize and transform your business, I think it might go a lot more smoothly.
Thank you. Next slide, Karen. Following the other issue which I wanted to talk about today is the critical audit matters. So many people in 2017 may not know this, but the SEC actually approved the PCAOB, which is basically the auditors of the audit firms, actually approved a new standard, which is called Critical Audit Matter, or CAM. The new disclosures for these CAM requirements were effective on June 15, 2019. Why is this important? And what's the relation to revenue recognition? Well, for financial companies like banks and insurance companies, the number one critical audit matter is allowance for loan losses. And that's because when you give a loan to someone in a large portfolio, you have to estimate what is my reliability to recover on these loans. But for non-financial companies, the number one critical audit matter cited was revenue recognition. Now, why is that important? As we go into the maturity phase of revenue accounting compliance with ASC 606, the audit firms have now positioned themselves to stabilize, and now they're actually going, as John would like to say, to optimize their auditing of revenue recognition. And what does that mean? So we're about 2 years out of compliance. So the audit firms have been giving a lot of the customers some time to digest and rework their processes. And now, because the PCAOB has required that they actually discuss and talk about these CAM disclosure requirements, they will now go back to their customers and really audit these revenue recognition processes with a fine-tooth comb. So as we move forward in the next 12 to 18 months, we will see a lot more emphasis on RevRec, and we expect the same for lease accounting in the next 12 to 18 months as well, because no audit firm wants to get a bad review from the PCAOB So they will have to ensure that their understanding of revenue accounting and all their clients is fully thought out and fully vetted. So again, the spotlight on revenue recognition is again coming back into focus because of this critical audit matter. John, any thoughts on that from your perspective?
Yeah, I agree with you 100%. And I was very interested in this also because, Julio, as you and I both know, when we take a look at what the SEC has been saying and the different areas around the reviews of the audits, what we're finding is that among the critical audit matters that they're investigating or are commenting on are things like disaggregation of revenue and the judgments. And how did you go about making these judgments? And I think it ties also back. So to continue that frame, the big four, big six, whatever you want to have really been looking at each other and coming up with different opinions on how these are evaluated and looked at. And of course, they all kind of conform or make a consensus and work around. And I think that's another reason, Julio, going back to your previous slide, is one of the reasons I think some companies have been waiting both on the lease as well as the revenue recognition is to see where all of these things are falling out, to really get a sense of what are we really going to talk about. We know about a year or so ago, the FASB came up with some allowances, if you will, that will allow you to not have to deal with rights of way or to accelerate different areas. And so as a result, we see a lot of change. And I think that's one place that customers are evaluating. But I think it's incumbent upon people, and it's important that you keep in mind that these are critical audit areas, and that the FASB, IASB, and SEC have said that they will be looking at both of these matters very carefully as they look at 10Ks and 10Qs. And then, of course, going forward in the future, they'll be looking very heavily at things like IFRS 9 and CECL and ASC 815, and when you get to Treasury space. So, right?
Yes, sir. Looking forward to the new derivatives, accounting hedging. Okay, next slide, please. So now we're just going to give a quick overview as to some of the key requirements for these new disclosures. So we're specifically talking today about revenue recognition and lease accounting. And what we found is disclosure requirements are much more extensive than the old standards. Why is that so? Because again, the FASB listened to the SEC and investors. Investors want to know more. Revenue recognition is a critical area, if not the most important line item on a company's P&L. And they really want to understand more about how a company is generating revenue, why a company is generating revenue, and what is the mechanisms they are using to recognize earned revenue versus deferred revenue. A significant portion of ASC 606 is all about that multiple element arrangement. And you really need to document with clarity in your 10Q, 10K, the exact way that you're recognizing revenue. As we've seen with lease accounting, there are new data points. New data points mean new underlying processes. And any underlying processes can either be manual or not manual. So you're using a software, using a system to generate those processes and to do those processes for you. So, we always say, yes, there's new data points, but more important, there's new accounting processes that underlie those data points. Because as we all know, not just companies, but the auditors have to get comfortable with, for instance, for lease accounting, how did you generate your IBR, your incremental borrowing rate? What is your definition of variable lease expense? What is your definition of low value leases? How are you disaggregating your revenue recognition? Are you doing it by geography? Well, guess what? If you're doing it by geography or process, by over time or point in time, what is the underlying data report coming out of that? So somebody has to get comfortable that these numbers that end up on your financial statements are coming from the right source and the data is actually correct. And lastly, there's significant judgment required. So especially for revenue recognition, a lot of companies recognize revenue differently, different industries, and the whole point of ASC 606 was try to standardize the mechanism and the process you go about by revenue recognition. So John, I don't know if you want to add in anything that I may have missed on this one.
Yeah, I think there's two. I think you're spot on. Certainly, as you look at both the lease accounting standard and the RevRec standard, the idea was to move away as much as possible from judgments and from interpretations to a standards-based approach. Take, for example, revenue and recognition, where they chose this specific 5-step methodology and standard by which you would do RevRec. And so again, it's about that creating a clarity in process, right? The whole thing about this is to create visibility, and we'll talk about that in a couple of minutes. I think the other one that's on here, Julio, that people don't realize is that disclosures, while managing your RevRec or managing your leasing, can be self-contained from that perspective in a non-integrated solution. Disclosure reports really require not just data from your revenue accounting system, but data from your entire ERP or ECC accounting system. And so
Correct.
that integration and the ability to connect and validate that data across is absolutely crucial. And so that's why I think that a tool like what we're going to talk about in a few minutes from Bramasol that leverages a platform like SAP is so makes life much easier for people who are having to do disclosures.
Thank you. Next slide, Carrie. So just very, very quickly, because I know Carrie is waiting patiently to demo our software and tools that's going to help you do your acceleration of your disclosures. But the 606 is really 5 key things. And the big feedback that we've seen is disaggregation of revenue is by far the most important as it goes along for the P&L. Companies really want to know, and the SEC wants to know, how are you disaggregating your revenue? And at a minimum, you have to do it by over time, which is like a service, or at a point in time, if I sell you a bottle of water. The next most important is really contract balances, because like I talked about before, the key is multiple element arrangements. And in that scenario, some revenue will be recognized, and guess what? Some will be deferred. So you have to have a proper mechanism of showing your investors and readers of your financial statements, how are you allocating revenue versus deferred revenue. And a lot of it also talks about the significant judgment, which is really a qualitative. And then if you have a cost to fulfill, which is like or a cost to obtain, which is like a sales commission, that now has to be deferred and amortized over the life of your contract. And lastly, talk about the performance obligation. So we had a customer last week we had a meeting with, they have over 9,000 performance obligations. So how do you aggregate that data and show it to your investors in a meaningful way? I think that is the challenge that companies are facing, is there's so much data, but then how do you slice and dice that data to make it meaningful? John, anything you wanted to add on that one? I know you went to that rec meeting last week.
I was at the same meeting with you, Julio, and I think that's a challenge for many of these companies, as in one of our colleagues had mentioned also. Remember, this is a two parts to this process, right? Number one is, yes, it is an accounting system. Yes, it is a system designed and a process designed to ultimately give you the disclosures, but you also want to use it as an opportunity to really learn about your business and see how they work, and thus the multiple hundreds of POBs that certain customers can have because they have unique software contracts or unique types of software engagements and bundles, et cetera, et cetera. So, absolutely, that's a place where if you're thinking that, in an environment like that, you can do contract modifications and manage multiple POBs like this, both in a prospective and retrospective view using spreadsheets, I think you're going to have severe challenges with that. And certainly disclosures becomes even more challenging. So again, and I'll remind my piece, I feel more like you, Julio, these days on this is, both of these regulations were designed to provide information to the users of financial statements. You can see this is a quote directly from Topic 606. As we keep this in mind, remember this is all about the users of the financial statements providing and getting clarity around the nature, amount, timing, and uncertainty/certainty of revenue and cash forecast flows. So that's my
Yes,
thoughts.
sir. So with that, we'll turn it over to our esteemed colleague, Carrie. So Carrie, the show is yours.
Hi, thank you, John and Julio. So I guess before getting into the demo, just want to talk about, and I'm excited to share with you, where Bramasol is moving with the ASC 606 summary reports. What you're going to see in the demo is CLMs, regulatory reports, and validation reports that we've built in order to, help you with your disclosures, but also we talked about making your auditors comfortable and having that foundation, but then being able to use this data on a day-to-day basis to help run your companies. So this is, I guess, a little teaser here of a 606 summary report that's coming out with the same drill down, drill through capabilities that you're going to see in the CLM demo coming up. Now, Julio, did you want to add to that before I actually get into the demo?
No, so Carrie, I would just say what you're seeing on the left side of the screen is, and Carrie will talk about it a little further down, is we listen to our customers. We at Bramasol listen to our customers, and while our reports are excellent, there was some commentary that, companies need not just granular information, but they need summary level information, because like we were saying, we have some customers with 10,000 POBs. So how do you make sense of that data? Well, you can't look at a report on a POB level, but if somehow you can summarize that and do it at a summary level, and you can have one type of POB and two types of POBs, then that's going to be very, very meaningful. So as part of that, we have a new release coming out very shortly, and we're very excited to talk about that in a little while. But Carrie, no, that was only my only comment, really.
Okay. Very good. And again, that was the 606, the next release that's coming out. And what we do have currently are the ASC 842 and IFRS 16 summary reports and drill through capabilities. So with that, let me go ahead and just get into
1 second, Carrie, while you're doing that, let me make a comment about those while you're starting to get set up. If you were to go back and look at both of those reports, and is Bramasol designed those reports with the end user in mind. The idea being that if you looked at both of those are what's contained for requirements in the FASB. And so as a result, we designed it from the end in mind, if you will, that you can use those for your reporting. We didn't take a bunch of data, try to make it pretty in a format. What we tried to do is take something that is required by the FASB and make it useful. And so you'll see how Carrie's going to walk everybody through the drill down, drill through capabilities.
Great. And actually, maybe just since we're continuing the discussion, I think you already went through, some of the benefits of the, the accelerators. What you're going to see again, it's a single source of truth. We're pulling, not only lease information from SAP, but as we talked about the the accounting and the fixed assets and such. So again, it's a robust reporting. It's a single source of truth. And that the middle there, you talk about the speed of the auditor sign off. Not only will these allow your auditors to sign off faster, but also Julio talked about having a comfort level that that you're complying. So you're going to see that, yes, here is your disclosure report, but then being able to get right into the individual contracts themselves or the individual POBs themselves, the RAR contracts, is just going to give that comfort level to your auditors that will just continues into the future as far as good faith. Now, you are going to be, I am showing the demo in ECC. I wanted to show you just, this PowerPoint here to let you know that the reports are also deployed in S4. So we chose to go ahead and do, the ECC today because most of you, on the webinar right now are still into ECC, but as you go through your journey into S4, just realize that everything you see today is just going to be, a smooth transition into S4 as well. All right. So with that, we'll just go ahead and we're going to start with the ASC 842 disclosure. I'm going to just select a variant here. Again, those of you that are very familiar with SAP, I can predefine my selection criteria. So, obviously for your disclosures, you're going to be selecting all of your, all your company codes, all of your contracts. But as you can use this solution for not only, regulatory requirements, but also just to help, provide you information into your, into your business. So at that point, you might want to select different validation rules or different company codes. Do more year-to-year comparisons or a range of contracts. So at that, actually, before I think I actually execute the report, Julio, did you want to just talk about maybe the function of multi-currency or the benefits of the gain and loss and variable cost selection of the report?
Yes, so the good thing about, so we know 842, well, first of all, we at Bramasol have two types of reports. We have the FASB report for US filers, and we also have the IFRS report. So we know that in the IFRS report, there's only finance leases. So having that flexibility of a system that's going to be able to run one calculation under a finance lease and have that bifurcation under the other accounting standard is very powerful. We were just on a customer call yesterday where that was their main concern. They have a number of entities outside of the US, and they ask us, well, can your chosen system run IFRS and then have a conversion into 842? And the power of CLM, as everybody knows, is absolutely yes. I think that is what I want to get the takeaway on this one, Carrie.
Okay, well, and I'm going to add to that just, as different, even the US companies have different accounting calendars, but as far as international, they do as well. So again, the solution here supports not only your calendar year, but any other calendar you may have, retail calendar out there, 445, 544 and such. So I think that's key. Another one, again, because we are talking about not only US, but foreign subsidiaries and companies, is that the report I'm going to run right now, even though I'm doing it against 4 different company codes that do have different company code currencies or contract currencies, it's using SAP and the conversion rates to go ahead and report, in this case, on the group currency. But again, the report can be run in either company code or the contract currency as well. Okay. So with that, I'm going to go ahead and execute this, and then we're going to continue on with Julio and I having a dialogue of really, breaking down what it is that you're seeing here, the different parts of this disclosure report. So with that, just kind of, again, we're doing a 2019 to 2018 comparison. And again, the group currency in this case was US dollars. And then Julio, I think I'm just going to scroll down slowly and let you maybe just break down again the report.
Yes, so as John said earlier, we built these reports with the user in mind, and that's very important because there's a lot of competition softwares out there that actually started with the data first. And we said in Bramasol, let's do something different. Let's start with what would a company have to put on their 10Q, 10K and work backwards and make the data work for us. So I think that's the critical differential that we have on our side. So very quickly, what you see on the screen there on the top side is really all your P&L impact. CLM does finance leases as well as operating leases. As we talked about earlier, CLM does both IFRS and FASB. So we know that under the IFRS, you have to have only finance leases. Under FASB, there's operating and finance leases. We also have our variant for the operating lease cost, as well as short-term lease costs. Some companies have decided they want to tell their readers of their financials what number they chose for their short-term lease costs. And we also have low-value leases. We know low-value leases is a requirement in Europe under IASB, but most of the US filers have put a note in their financial statements saying that they have used the same materiality threshold for capitalizing fixed assets. And that's why that requirement is there. We also have any sort of variable lease income. So variable lease income is anything that is not fixed within the contract. Things like usage for copy machines and taxes and insurance that is not known at the beginning of, you can put that as a variable lease cost. The total lease cost ends up to be the line item that we see on the P&L statement. In the middle of our report, you will see all the cash flow items, the usual cash paid for all your leases. And then there's one line item that, to John's point, who spoke earlier about the FASB updating, the right of use asset in exchange, that requirement has changed. A year ago, the consensus was it was only modifications of non-cash items. The Big Four got together, as John was talking about earlier this year, and they are now saying that that line item, any new lease entered into the period, is a non-cash item. Therefore, our system accurately pulls all new leases into that line item for the period being reported. Very important. And lastly, at the bottom, we have all the new data requirements, which is the weighted average of the remaining lease term, the weighted average of the contracts, and that is broken out by operating leases and finance leases. We in Bramasol have our own proprietary data calculations, which have been tested by all our customers. And John, so far so good.
So far, so good, Julio. I mean, I love these because we're going to see in a minute. While these are, in and of themselves, I think these are powerful reports that help you aggregate the most important information together. I think what you're going to see next from Kerry is going to be really cool. So Kerry, show them the drill down, drill through stuff.
Okay, so I guess here's where not only the comfort level for your accountants, but also the comfort level for your company itself, and being able to do some more analysis on the data itself. So I could have selected any of the different figures on the report, just selected the one here, and then it's breaking all the data down by contract, by year, and then with subgroupings as well at the bottom. This is a very long report, but if I go down to the bottom, then it's going to, let me just drag this down, tie back directly into, or just continuing to scroll. I just have to prove the point here that yes, okay. So it is tying back to the numbers that you did see in the report. Now, again, because this is an SAP, you're seeing the SAP format here, you can go ahead and export this to Excel, or PDF. So again, for the backing for your regulatory reporting, you can go ahead and export. You've got that background documentation. Or again, if your auditors are, taking a look at the report, they have questions about really, tell me more about contract 105 here, then you can go ahead and drill into that contract itself. So you've gone from your regulatory report into the line item documentation contracts, and then right into the contract itself. Okay. And I think, and Julio, you might have mentioned this before, that they actually took the recommendation from FASB on how to report, and that's how we went ahead and built our solution here, so companies can actually cut and paste into their filings, right?
Yes, Carrie, and I mean, we have multiple customers doing that as we speak to report 930 numbers. So, and like I was telling John before, so far so good. I mean, our customers are very happy with these reports, and as our customers come back with refinements or things that we can do better, we are always listening and always trying to improve our product every single time we go in.
Right, and I think that the other great thing is, we did do these as a co-innovation with 2 Fortune 500 companies, and continue to roll them out and work with large companies and get feedback. And of course, Julio, you as the head of our technical accounting team are constantly together with John Scott monitoring the FASB, IASB, and Big Four, so that when customers buy these reports from us, they get the updates as part of their ongoing maintenance support. So that we're constantly improving and updating them so that you can use them for your 10Ks and 10Qs.
Correct.
Great. And then I'm going to go into the maturity report, and we've got the two, I guess I said we have the 2 disclosure reports, but that's really false, because you probably just recognize that the report I was just showing you is really 10 different data points that you have to report on, or reporting points that we've just consolidated into, again, that single report. But with saying that, I'm going to go ahead and go into the maturity analysis. Same, again, you have your selection criteria, again, your calendar criteria, and then your currency criteria. Go ahead and just select a variant for this. And this one's going to look much more familiar to you. And I'm going to go ahead and turn this over to Julio.
Yeah, so the maturity analysis is a carry forward from our ASC 840 days, which is basically, it gives the remaining life on the leases, or the remaining dollar values that I actually owe on a gross basis for the next 5 years. So again, our great consultants at Bramasol developed this report, and I keep on saying our customers are very satisfied with the results, and so far it's been working really well. And it gives really good insight into what are my remaining commitments for my leases that I've declared on my balance sheet. So it's a really good tool, not just for your compliance, but it helps you, just coming back from a treasury conference, it really helps you that leasing, it gives you the cash forecasting ability to know for the next 5 years, I owe X amount, and in the buckets of years for the remaining periods. So it's a good talk track when you talk about how does leasing affect my treasury calculations, and it's a big part of your cash forecasting. John?
Yeah, and I think, Julio, that's a great point. And I think the other point, when you look at what Carrie was showing everybody about the currencies, because if you think of the issues and challenges, Julio, that you and I heard about at the AFP conference, one of them is the management of the global impacts of Brexit, China, issues going on in the Middle East and in South America, and the volatility of currencies. And your ability to report on these or understand your exposures in the different currencies at the different levels is absolutely crucial. And this came up in a number of different discussions that were had at the AFP, where this is an untapped area for data and an untapped area of understanding. So absolutely, that is that crucial tie to for Treasury.
Very good. And while Julio was speaking there, I went ahead and just double clicked, went again to 2019, just to show you that we had that same capability of going into the line item details and then into the contracts themselves. Okay.
And if I could just say, Carrie, just really quickly, we had a meeting with a CEO of a Fortune 500 company 2 weeks ago, and Carrie showed him that exact feature she just did, which is she went from the 10Q maturity analysis and double clicked back into CLM. And his eyes just opened up and says, wait a minute, you're telling me I can audit my own guys from my computer? And he was very happy. Karen, if you want to speak on that, the power of that drill down.
Yes. Well, again, it's not only, going to provide you with your accountants that comfort level, but on a day-to-day just management level, it's giving you the insight into, where can I focus? You're going to, when I get into the 606, we're going to talk a little bit about the impairment losses. Same, getting that detail there where companies weren't even, looking at that data. before being, I guess, forced, to have the requirement of reporting on it. And then now having exposure to it is just just exposing, I guess, opportunity for improvement. So, all right.
Well,
So kind of just to continue on a little bit, I'm not going to go through each of these, but again, we had our disclosure reports, but then on top of that, we've got the validation reports themselves. So I'm just going to go select one. Again, the lease payment. Again, we had the asset detail, the cost report, and then the lease report for all contracts has all the information in it. But let's just take a look at the payments report. Again, same criteria as being able to focus what you're looking at. Where do you want to do your analysis. Again, this is more for getting your operational details versus regulatory reporting. And then let's go ahead and execute on this one. And I know Julio always has something to say because payments are everything, right, Julio?
yes, ma'am. And, we were just talking about the treasury function. So, when you think about what this report is showing, you have two different audiences, right? So, you have your SEC reporting team that is showing your cash flow payments, which has to be disclosed. But then what you just did there, Carrie, in our validation report, is this is going to the operational accounting team to make sure that all the payments actually reconcile to the GL. Secondly, your treasury department is very interested in this validation report. Why is that? Because treasury is all about cash in, cash out. Leasing, as we know, is one of the largest expenses on a company, especially large companies. And it just gives good visibility. And from the old days when I worked at corporate, you would have to print out the reconciling report, put it in a binder. Well, now all that stuff is automated. So you have different users, treasury team, operational accounting team, SEC reporting team, all going into the system and doing their own reporting, own validation, and getting comfortable that this is an all-inclusive, holistic software that ties directly into your GL natively. So that's the power from where I sit of this tool. Harry?
Thanks, Julio. And there's something kind of off topic, but looking at the validation rule just reminded me too that I know some companies might not be aware of this, but with CLM, so SAP's contract and lease management solution that we're actually extracting the data from, is that some companies don't necessarily want to set up a fixed asset for each of their right of use assets. And I guess this validation rule is just showing too that you can just have direct posting to the balance sheet as well. So, we can pull from both. So just wanted to point that out. Okay, so, that kind of wraps up the live demo for the CLM disclosures. Want to just go back, can summarize what you just saw. And then John had mentioned this before that, all of Bramasol reports are registered with SAP and therefore, ongoing maintenance and regression testing. And then again, we talked about going from ECC into S4. So again, that's, all part of, having registered and part of the maintenance. And what you're seeing on the left-hand side, I was showing you the leasing reports. What you're seeing on the left is the waterfall or operational reports that Bramasol has developed, and then also all of the disclosure reports for ASC 606. For instance, I mentioned the impairment. So on, the disclosure, the 50, I was like, 54A and 4B, we broke that into two different reports because there was so much information that needed to be reported on. And again, the impairment loss reports really exposing and letting companies do that analysis on why are they having impairment losses. And then the capability with all of the disclosure reports within 606, just as you saw with ASC 842, you're able to drill through into the details of those contracts. And now, just brings me back to kind of, again, what I'm really excited about is listening. As Julio had said, we've listened to our customers, the requests. They really love the drill down or the summary level capabilities within CLM for reporting and then getting into the details. And so this is coming up on our next release, the summary reports for 606. And at that point, I'm going to go ahead and, I guess, turn it back over to you, Julio. Well, and you can talk, once you talk about the analytics first before we go through our new release.
Oh, yes, it's my favorite topic. So, we always say that how you use your data is critical. And what I mean by that is, yes, you get these reports, you will comply with 606, ASC 842, lease accounting, revenue accounting. But just coming back from this Treasury conference, it's all about data. And that may sound, everybody says that, but it really is, because I think Carrie alluded to it earlier, where once you have all this data, so let's take, for instance, a specific example. We have a customer in Silicon Valley. They have 9,000 POBs, right? So that's a lot of POBs. So what can you do with that data? Because before, you never had visibility to that amount of data. So it goes to the next level of your thought process, which is, how can I make better decisions with all this data? And that's the whole concept of what we believe the analytics for 606 as well as 842. When it comes to lease accounting, John likes to talk about, it helps you with that lease or buy analysis. When it comes to 606, it helps you bifurcate if many of my POBs are at a point in time, then maybe I should focus my marketing spend on those POBs rather than the overtime performance obligations. I know John likes to talk about the analytics piece because it's a very critical piece for our customers now. John, maybe you want to jump in and give some more insight on that.
Yeah, thank you, Julio. I think, what you have here on the upper left-hand corner for those familiar with revenue accounting and RAR is a visualization of the revenue schedule screen. And what I always loved about this particular piece is, as I go back to the days when I worked for AT&T, and now with AT&T Wireless out there, think about, as you look at your total revenue, and then what is planned, what is recognized, and unplanned, you can begin to drill down into those pieces and understand things like, am I seeing a lot of contract modifications? Am I seeing places where people are not taking advantage of upgrades, right? So now you have to separate your actual revenue. You can't bundle it together. You have to separate it out into when the customer, quote unquote, takes control. And for an upgrade, that's when they execute the upgrade. Well, if you're not able to recognize that revenue, it begins to tell you that maybe people aren't taking advantage of the upgrades, so you can execute marketing programs. From a disaggregation of revenue, you can begin to track back really down to understanding in a better way where the true costs, where the true revenue opportunities are over time. And as you begin to see the evolution of RAR and CLM themselves and the treasury functions, I think a lot of people will begin to be interested in using this as a what-if analysis and saying, how might my recognized revenue change, and how might the dynamics change based on different take rates on upgrades and different take rates on plans. So we found that this is a very helpful and exciting thing. And I sure do wish that I had this 20 years ago when I was running an AT&T acquisition program. Okay, Carrie. So let's turn it over to Vivek. Vivek, why don't you take us through some of the innovations that you and your team have planned? Let's see. Vivek, you need to unmute.
I'm sorry, that always happens. Thank you, John. So, like John, like you mentioned before, our disclosure reports are already in productive use at several customers, and we have used that opportunity to use that feedback to continuously improve our disclosure reports. The improvements have been both in terms of performance. We are working with large data sets here. Like you mentioned, there are several customers where multiple thousand POBs are being processed, are being calculated. And so performance was one area where we were focused on improvements. The other area where we worked on and where we are working and we're very excited about is the reworking. You saw some slides about the new screens that we have. And the new interpretations and new regulations, modifications to the regulation means that we took the opportunity to rework the reports. So the earlier reports provided all of the disclosure data, but they required some level of understanding of the regulations on the part of the user. And that turned out to be challenging for some of our customers. So the new reports are designed to not only collect the disclosure data, but like you saw, they present it in a way that is ready to use in an organization's 10Ks, 10Qs, and so on. And that doesn't mean that we let the granularity of our reports go away. They're just, like you saw, they're just one click away. You can drill down right as deep as you need, right down to the individual contracts. So our roadmap for the future enhancements in the disclosure reports, we have the automated ASC 606 disclosure package, which will include 3 new summary level reports. The disaggregation of revenue by product, POB, and geography. That's the one that you saw the screenshot and the slide over there. Then we also will have a new report on the roll forward of the contract balances and the remaining performance obligations by reporting period. So these reports, as is our practice, these reports will all be available in both ABAP, that's for maximum backwards compatibility. We know that a lot of our customers are still on ECC, and they are also available in BW and are certified to work in a S/4HANA environment as well. In addition to the ASC 606 reports, we have also developing the IFRS 15 flavors of the same reports. Again, this is based upon customer feedback. And similarly, we are working on additional modifications or improvements to the lease CLM reports for automation of non-cash adjustments, new leases within the period, and remeasurements. Back to you, John.
Thank you, Vivek. Your team has done a terrific job so far, and thank you to the hard work that you and folks in India have been doing. And I know that I've been made aware that there are some even more improved versions of what we've seen so far today. So we look forward to sharing those with everybody out there. I do want to mention a couple of things before we talk about the Treasury Management Conference, but keep that up there. Go ahead, Carrie. I think what we've seen today is really important to understand that what we've done from a Bramasol perspective is augment and enhance what SAP has delivered in a very meaningful way, allowing you to take what SAP has done from a revenue accounting perspective and not just adding ABAP reports that pull data, but beginning to add value to that equation by allowing you to have summary reports. But they're not just summary reports that you build in BW or summary reports you build in Excel. These summary reports are unique because what they provide you is, number one, an easy way to see the FASB. Number two, a tool that provides a FASB-based report. But number three, most importantly, drill down, drill through, and drill back capability so that as you go through the audit process, you have an automated way to really help the auditors understand how did you get to those balances and where do they come from. And if just as importantly, Julio, Vivek, and the whole team prepared validation reports so that each of these comes with sets of validation reports that you can run to help your auditors, both your internal and external auditors, feel more comfortable with the results that you're getting. And as we mentioned, there are customers out there currently using these to produce their 10Ks and 10Qs. Second point I want to make is that Bramasol has optimized these reports and provided them in multiple formats. So if you're really interested in just having your own extract for ABAP and getting all of the data that you need because you have other ERPs, you have other systems, but you need the data from here, we've got that. If you require or want a 10Q, 10K ready report, we've got that. If you're looking for something that works in ECC and in S4HANA, we've got that. So I think it's a really versatile and great set of reports and work that the team has done here. And you can continue to look for us to do ongoing development from the dashboarding and analytics perspective as well. And, you know, as the leaders in finance and finance compliance in particular, you can also begin to look for us. We will be developing reports that focus on IFRS 9 and ASC 815 as well, and begin to lead Treasury, which leads me right into an opportunity for all of you. I recommend that you all reach out for anybody on here who's interested in Treasury. Attend the Treasury Management Conference. It's November 4 to 6 in Chicago. Anybody and everybody who's Treasury at SAP and a lot of the key partners like Bramasol will be there. So I strongly encourage all of you to join us there. With that, I am happy to wrap up unless Julio, you or anybody has any closing comments.
I am good. I didn't take a look to see if there were any questions that came through. I know that you will address those after the webinar is over, but just point that out. Okay.
Thank you. Excellent, John.
Yeah, there is a question here. There was one, and I thought I just covered it here. Our focus right now is on the four accounting standards, not two accounting standards, ASC 842 and IFRS 16, and ASC 606 and IFRS 15. Our focus is on not just the report design and development. We've delivered and created and we implement those reports. So I think it's very important for you to understand you buy those reports from Bramasol. It's something that we offer our customers as a value add. We offer them at a very reasonable price. So reach out to us. We can give you pricing on them. And they are accelerators and tools. Let's be super clear, and I want to be super clear. Nobody makes a report that's quote unquote out of the box, because nobody's solution is out of the box. Even in a fit to standard environment, you have your own unique company codes, you have your own unique descriptions, there are some unique aspects. Having said that, this report greatly accelerates and gets you 70 to 75% of the way there in terms of what you have. And that's why companies from the Fortune 500 are beginning to take a look at, and many of them have engaged us to help them with their disclosure reporting on these. We will continue to focus on the development of these tools for ASC 815 as well as IFRS 9 and CECL, and many of the other required footnotes and reporting. So thank you everybody for joining us on this webinar. We'll be focusing over the next couple of months on more topics related to this. We'll be talking a bit about Treasury very soon and how you can use Treasury as a spear point for your ROI on an S4HANA. We'll be doing a cash payment factory as well in November, and then looking to December and beyond for some other great topics. And for those of you who have any topics that you'd like us to cover, please feel free to reach out to me, John Froelich, for Bramasol, and you can reach me at my email, jfroelich@bramasol.com, and we'll be glad to answer your questions or support you. So thank you to my great team here who always does such a terrific job, and thank you all for listening. Have a great day, and we look forward to seeing you on future webinars. Bye-bye.